A warm welcome to today's edition of Money Moves. I am Melissa Enoch here at the FMDQ studios in Lagos. All right, let's begin your news now in Ghana, where the president, John Mahama, has launched the Ghana Infrastructure Plan, a long-term blueprint to drive the country's social and economic development through strategic infrastructure investment. The plan, developed under the National Development Planning Commission, outlines Ghana's vision for a world-class infrastructure network by 2057, the nation's centenary year. In Egypt, the African Export-Import Bank says that the 2025 edition of its annual trade finance will be focused on the oil and gas industry. This was according to Gwen Mwaba, the managing director in charge of trade finance and correspondent banking at the Afrexim Bank. Speaking to a cross-section of journalists in Cairo earlier today, Mwaba says the forum, due in Abidjan from November 4th, will provide technical skills for African bankers, exporters, legal practitioners, and others in structured finance and other areas of handling deals and investments in the hydrocarbon sector. Let's take a listen.
25 years of having done this, we have managed to grow this training and its interest. I think in the early days we used to get modest attendance of between 50 to 80 people. Now we're kind of topping 300 and above, and we continue to improve on that training. So this year the focus of the training will be on navigating, changing a global landscape. We are seeing the need to shifting alliances in the global landscape. So we start by educating our African bankers on why it's important.
Tanzania has begun exporting sugar for the first time, marking the end of years of recurrent shortages and price spikes. For decades, the country faced supply gaps during factory maintenance and rainy seasons when sugarcane yields declined, forcing reliance on imports. The turnaround reflects growth in local production capacity and government efforts to achieve self-sufficiency in the sugar industry. Finally, on News Now, Nigerian breweries has reported a loss per share of 0.13 kobo in Q3 2025 compared to 6.35 naira last year due to a one-off 6.08 billion naira impairment from the digital integration. Revenue rose 33.4% year-on-year, while gross margin expanded to 33.8%. Net finance costs fell 81.9% on FX gains, narrowing pre-tax loss to 2.77 billion naira from 86.66 billion naira. EPS for the first 9 months of 2025 climbed to 2.75 naira from a loss of 14.55 naira in 2024, reflecting strong operational recovery.
Let's now track how the markets are wrapping up trading for today, starting off with the equities. In West Africa, Nigeria's NGX advanced 0.49%. In contrast, the Barrow VM slipped 0.22% to 337.70. The Johannesburg Stock Exchange jumped 1.50% to around 110,500. While in North Africa, Morocco's MASI declined 0.21% and the EGX30 closed on the positive, up 0.29%. And in Kenya, the Nairobi Securities Exchange closed on the positive, up 0.25% to 178.80.
Thank you very much, Grace, for those market updates. And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching and bye for now.